Today, I'll tell you everything you'll ever need to know about getting a loan or a mortgage to buy a house in Denmark. This includes how much money you'll need to put in to buy a house or an apartment, and answer all your most common questions. If you're new here, my name is Mario, and on this channel I help experts in Denmark with everything related to money and investing. Today we're gonna focus on the most important topics on buying a house. The Danish system. To buy a property in Denmark, the minimum you need to put down in cash, so the down payment for the property, is 5% of the purchase price of the property. So 5% of the apartment or house you want to buy. You can put more if you want, or if you like being asked to do it, but you can't put less. So again, this 5% needs to come up from your own capital, meaning your savings, your family money, and so on. The reality is that you likely don't have the 4 million or 5 million or whatever millions you need to pay for the house or apartment all in cash. So for the other 95%, beyond the down payment, you can borrow this from bank and from mortgage institutions. But this comes into two different loans or two potential options. Because in Denmark, you're only allowed by law to take a mortgage for 80% of the value of the property. So you can only mortgage 80% of the value of the house or apartment you want to buy. This is the so-called Realkredit loan or the cheap loan, okay? And this is the loans that had up to just a few years ago 0 or 1%. Now, if you follow the math here, you put 5% down, then you get a mortgage for 80%. We're missing then a 15% of the value. And for this 15%, you can either put it out of your own pocket as well, or if you don't have that money or you don't want to put that money, you can borrow as a bank loan directly from the banks. So we're gonna touch on this in a second, but the mortgages, you don't get them straight from the banks. You get it from something called a mortgage institution. But this 15%, if you need it, you get it straight from the bank as a personal loan from the bank to you, not as a mortgage. And this 15% loan, that so-called bank loan, that is, we can say, the expensive loan, which usually has an interest rate which is a couple percentage points higher than the Realkredit loan. But again, if you have the money, you can put the 20% down, so the 5 and 15%, and avoid the expensive loan altogether. If you feel like, or if you have the cash, you can put down 25%, 30%, 40%, up to you. One quick note is that though by law the minimum down payment is 5%, if you're a foreigner, you will likely be asked by banks to put more money than the 5%. Because again, crucially, banks are not obliged to give you the mortgage if they don't want. So for people that they deem risky, and that's basically everyone who's non-Scandinavian, so other Europeans as well, you can be deemed again risky, and the bank can say that for your type of profile, we need 10% or we need 15%, or sometimes we need over 20% as well of down payment for you to then access this mortgage. Again, the banks, even though will not be the ones giving you the Realkredit loan, they're the gatekeepers for that. So you need to make sure that you have a good pitch to them, explaining them that you're not a risky person. And there's going to be links in the video description, a note or like a course I have put together on that point specifically. But on to Realkredit loans. So now for the rest of this video, let's focus on this 80% of the value, the mortgage, the so-called Realkredit loan. In Denmark, there are two types of mortgages, so two types of these Realkredit loans. You have the fixed interest and you have the variable interest. First, let's look into the fixed interest loans. In 2023, the most common fixed loans are the 30-year loan with a 5% interest per year. So when you get this loan, it means that the interest on your mortgage will be 2040, 2050 will still be 5%. Even if the interest rates go to 10% or 20%, you will still pay 5%. If you want to cover the risk, the fixed interest loans are really good in the sense that I can give you my own example. I bought this house like 5 or 6 years ago, and then I got a fixed loan for 2%. And even now with interest rates going to 5%, sometimes going to 6% perhaps, I still pay 2%. And that's fixed, and I could go and renegotiate and pay higher interest and then get lower on my loan. Not gonna touch on this in this video. Just know that if you want to cover your tail risk, this is a good option. And even some people got a 1% or 0.5% loan 2 years ago. Lucky. Very importantly, you can't negotiate the interest rate on these loans. So the Danish mortgage system is complex and special, and these loans are not issued, again, by the banks, by something called these credit institutes, who then issue your mortgage and then sell it into the open market as bonds. This means that the debt is not held by the bank, so the bank is not the one keeping your mortgage, but instead the ones who are actually owning your mortgage are investors, which most of the times is pension funds, hedge funds, and so on. which means in practice that then the bonds, and by extent the interest rates, are priced by the market. And again, this is a very simple 1-second explanation about something that is very complex. If you want to hear more about this, how mortgages are priced, there's going to be a link down in the video description. Now let's talk about variable interest loans. So if you don't want to fix your interest rate for 30 years, you can get a short-term variable interest loan. So that can be fixed for 1 year, 3 years, 5 years, and sometimes it can be not fixed at all, and it changes every quarter or every month. So it depends on a lot of different things. The interest on these loans is usually a couple percentage points lower than it is for the fixed loan. For example, now at the moment I'm recording this video, if the fixed interest loan is a bit over 5%, these ones are around 3.5%. The thing is that these shorter term loans or these variable interest loans have a reissuing period. And once that period is passed, the interest rates update to the new market prices. So if you get a loan that is like fixed for 5 years, you'll get a loan in 2023, then you'll pay the same interest for 24, 25, 26, 27, but when 28 comes, your interest rate will update. If you have been unlucky and you got variable rate 5 years ago, and then put all on variable, and then the moment the interest rate is updated, you went from paying likely 0 or negative to paying 3-4% potentially. So something to keep in mind on the risk that you get in these options. What you can do as well is to do a mix of fixed and variable interest. So you don't need to go only one setup, you can have both. So for example, if you borrow 3 million krona for the Realkredit loan, you can borrow 2 with a fixed % interest for 5 years, and then 1 with a fixed interest rate for 30 years. Again, if this is worth it or not, depends on up to you. You'll end up with an interest rate that's kind of in the middle between the fixed and the variable, but at the same time, you'll be hedging your risk. So it's an option to consider. Now let's look into 3 must-knows before we close this video. The first one is that there's something called interest-only loans in Denmark. And in Denmark, again, you have loans where you can basically take up the mortgage, but only pay back the interest and not the loan itself to the bank. So basically, you pay this 5% a year, and literally for the first 10 years, nothing else. So you don't need to basically, like in any normal loan, pay back part of the loan each year. This used to be an incredible deal when you had 0 or 1% interest, in the sense that you would basically get almost free money, in the sense that it was almost why would you pay something back where you basically pay almost nothing to have borrowed? But again, now with the new reality of higher interest rates, this adds up, and it makes a lot of sense to actually pay back the mortgage if your finances allow. But it's going to be more explained in a video over here, where I should before the interest rates went so up, but you can still understand these things more in depth. The second point is the bidragssats. And the bidragssats are a fee that the credit institutions put on top of your mortgage that you need to pay each year. And this fee, for example, will depend on a different set of variables, but overall, for example, if we take a fixed loan for 30 years with repayments, so you're not doing this only interest thing, you'll pay 1% per year on top of your interest rate. So this means that if your interest rate is 5%, if you add the bidragssats, there's going to be 6% that you're actually paying each year. So the actual interest rate is going to be higher. And there's no way to escape these bidragssats, but as I said, it depends on different factors. So the higher the risk of the mortgage, the higher the bidragssats. If you go with a fixed for 1 year interest rate without repayments, you will have a higher bidragssats than if you just go with a fixed for 30 years with repayment type of loan. And also, the more you need to borrow, the higher the bidragssats. In the sense that if you put 50% of down payment, your bidragssats will be lower than if you don't. Complex topic again, nothing to deep dive on this. Just know that if you think you're paying 5%, you're actually paying 6%. 3 is the mortgage tax deduction. So the third and final note, again, is that in Denmark, you're allowed to deduct 33% of the annual mortgage interest costs, including bidragssats, from your taxes. This means that, again, if your interest rate was then 6%, the effective and final interest rate will be 4%, in the sense that if you multiply 6% times 66%, so the actual payment, you get approximately 4%. So you will still pay 6% to the bank, so the 5 plus 1, but you'll get 2% of that back as an effective post-taxes salary increase, so you'll get it in your income statement. So if you get in hand X salary, you'll just get a bit more. And crucially, when you look into the real estate market, and there's something called the brutto and netto costs. So the brutto are the costs before you get this deduction, and the netto are the costs after you get this deduction. And in the long run, this can end up being a lot of money. So that's it. If you want to deep dive more into this topic, you definitely should check out my course called Dream Home Denmark, and there's going to be a link down in the video description. But in the meantime, as you're here on YouTube, you should check this video out, where I outline the top house buying mistakes in Denmark and things you should definitely avoid.